Want to start investing, but think you need a ton of money? That's one of the biggest myths out there. Today, I'm going to show you exactly how to start investing or even trading with just a little bit of cash. The secret isn't a huge lump sum. It's about starting now and building good habits. First things first, let's talk about financial prep and getting your mindset right. Before you put a single dollar into the market, you need a plan. Ask yourself, what are you investing for? A house down payment? Retirement? This is your goal, and it will determine your timeline. Next, figure out your risk tolerance. Are you a conservative investor who hates the idea of losing money? Or are you more aggressive and willing to take bigger risks for potentially bigger rewards? Knowing this helps you choose the right investments. Now, a crucial step. Make sure your financial house is in order. You absolutely need an emergency fund. This is 3 to 6 months of living expenses set aside in a savings account. Why? Because if an unexpected expense pops up, you won't have to sell your investments at a bad time. Also, pay off any high-interest debt, like credit card balances. The interest you're repaying on that debt is almost always higher than the returns you can expect from investing, so tackle that first. Once that's done, you're ready. Remember, the most important thing is to just start. The power of compounding is incredible, so starting today with a small amount is way better than waiting to start with a larger amount later. Set up automatic regular investments, even if it's just $25 or $50 a week. This strategy is called dollar cost averaging, and it's a fantastic way to build wealth over time. So, where should you put your money? Let's look at the best options for small capital. First up, micro-investing apps like Acorns or Stash. These apps are brilliant because they round up your daily purchases to the nearest dollar and invest the spare change. You're investing without even thinking about it. Another game changer is fractional shares. You want to own a piece of a big company like Amazon or Google, but one share costs thousands. With fractional shares, you can buy just a small slice of a share for as little as $1. This lets you invest in your favorite companies no matter how expensive their stock is. Next, we have ETFs and index funds. Think of these as a basket of stocks all bundled together. For example, an S&P 500 index fund lets you own a tiny piece of the 500 largest companies in the US. This gives you instant diversification, which lowers your risk, and they usually have super low fees. So don't forget about your workplace retirement plan, like a 401k. If your employer offers a match, that is literally free money. Always contribute enough to get the full match. Lastly, consider robo-advisors. These are services that use algorithms to build and manage a diversified portfolio for you based on your goals and risk tolerance. They have very low minimums and are perfect for a hands-off approach. Now, a quick word of caution about trading. Trading is different from long-term investing. It's higher risk and more active. If you want to dip your toes into trading, make sure you use a zero-commission broker. This is essential when you're reworking with a small amount of money because you do and want fees eating up your capital. As a beginner, it's also wise to focus on low volatility assets, like well-established blue-chip stocks or index-tracking ETFs. Rather than trying to hit a home run on a risky stock, and most importantly, be disciplined. Have a clear plan for why you're buying and when you'll sell. Don't let emotions or short-term market noise drive your decisions. Building wealth with a small amount of money is absolutely possible. It all comes down to starting early, being consistent, and using the right tools. If you want to see a more detailed guide, including a live example of me buying a stock, check out my video if I started investing in 2025. This is what I would do. Thanks for watching, and don't forget to like and subscribe for more tips.